All right, the next one in chapter 5 is M5-6. M5-6 gives you a following table indicating this, and it wants you to indicate the sign or the amount for the effect on the following transactions, whether it increases or decreases each part of the balance sheet or accounting equation. And they want you to consider each item independently. What I'm going to do is it doesn't ask you to write up the account unless it's in a stockholder's equity account, unless it affects stockholder's equity. But I'm going to go ahead and write out each account for you to make sure that we're all on the same page. This problem serves two purposes. The first purpose that it serves is that it gives you a review of something that we talked about all the way back in chapter 2. Essentially, this is analyzing the equation, analyzing the effects of each transaction on the accounting equation. So it's kind of a review. That was the first step. Before we record journal entries, we analyze transactions. The second reason why I assigned this problem is to help you with the ratios that we will talk about later on. We'll talk about asset turnover ratio. We'll talk about net profit margin ratio, among others. And understanding the effects on the accounting equation will help you determine whether or not a company's ratio will go up or down. So this is kind of a jog of your memory, a review, but also will help build the foundation for us to analyze ratios later on. All right, the first one says recorded services provided to customers on account for $500. In this instance, we provided services on account, so this would be 500 and it would be accounts receivable. Notice that that would be a debit if we were recording a journal entry, right? And then we provided services, so we earned revenue. This would also be 500, and that would be some sort of revenue, service revenue or something like that. And then notice that this would be a credit, so debits still equal credits. This increases stockholders' equity, this increases assets, so that's your ultimate effect on these two. Next, it says recorded $50 of supplies purchased from a supplier on account. In this instance, we would increase supplies plus 50. I'm just going to abbreviate supplies, and this would be your debit. And then we would buy them, it says we bought them on account, so we would increase liabilities here, 50 accounts payable, and that would be your credit. So then debits would equal credits, accounting equation plus, and a plus still balance. The last one says recorded advertising services of $1,000 received but not yet paid for. So in this instance, we received $1,000 of advertising services. Advertising services is a period expense. Whenever you get that actual service, it's in that period that you recognize the expense because the benefit is said to have come in that period. Remember, expenses are incurred so that we can generate revenue. So if you advertise during this month, it's said to have generated revenue this month, right? So we increase advertising expense, but one thing I want you to keep in mind is we increase the expense, but at the same time, this increase to an expense is actually a decrease to stockholders' equity, okay? So I'm going to go ahead and wipe this so that our accounting equation looks like it balances. I'm going to put a minus, but just remember that it increases the expense, okay? So it's a minus, it's an advertising expense, and the amount was $1,000. This would be a debit, but remember, this is actually an increase here. Increase to expense, but a decrease to stockholders' equity. And then it says we have not paid for it yet, so that would be accounts payable. So we go over to liabilities, we plus accounts payable 1,000. And that would be a credit to the account. So debits equal credits, 1,000 equals 1,000. A plus on this side of the equation, a minus on this side of the equation, accounting equation still balances. That is M5-6. Please send me any questions that you might have.